Cryptocurrency explained for beginners. Have you ever wondered if buying Bitcoin could make you rich or completely broke? Today, we're going to break down what cryptocurrency really is. No hype, no confusion, just simple facts. You've probably heard names like Bitcoin, Ethereum, or Dogecoin. But what are they really? Are they digital money? Are they investments? In this video, we'll explain what cryptocurrency is, how it works, and whether it's something you should care about. Chapter 1. What is cryptocurrency? Let's start simple. The word cryptocurrency comes from cryptography, a method to secure data, and currency, which means money. So cryptocurrency is digital money that's protected by encryption. It exists only online. No physical coins or bills. You can send it, receive it, or buy stuff with it, just like regular money. But unlike your dollars or euros, crypto isn't controlled by any government or bank. Just you, the internet, and your crypto. In fact, that was the whole idea behind Bitcoin, the first cryptocurrency created in 2009 by someone, or maybe a group, called Satoshi Nakamoto. No one really knows who Satoshi is. They've never shown their face. But what they did was revolutionary. They made a form of money that no single government could control. Bitcoin and others were created to let people send money directly, without needing a bank in the middle. Why did Satoshi create it? Well, around that time, the world was going through a massive financial crisis. Banks were failing. People were losing trust in the system. So Satoshi built something new, a money system run by code, not people in suits. Originally, Bitcoin and other cryptos were meant to be used like regular money, to buy stuff, send to friends, pay for services. But here's what happened. The price started going crazy. Imagine buying Bitcoin at $1, and later it's worth $10,000 or even $60,000. People stopped using it to buy coffee and started holding it like stocks, hoping it would go up in value. Like imagine buying a coffee today for 0.001 Bitcoin, and tomorrow that same coffee costs 0.002. That's why most people still use regular money for daily stuff and crypto to try to make profits. But before you use it, it's important to understand how it actually works, and that's what we'll cover next. Chapter 2. How it works. So now you know what cryptocurrency is, but how does it actually work? It uses a technology called blockchain. Imagine a notebook, a public one. Every time someone makes a transaction, it gets written in that notebook. But here's the catch. Once something is written down, it can't be erased or changed. That makes it secure and trustworthy. Now imagine that every single person in the system has a copy of that notebook. So if one person tries to cheat or lie, everyone else can see it's wrong. That's how blockchain works. Each page of the notebook is called a block, and once the page is full, it gets added to the chain. That's why it's called a blockchain, a chain of secure, permanent pages. But how do we know that someone's transaction is real? Now, when you send crypto, that transaction is checked by a bunch of computers around the world. But they don't just check it for fun. They have to solve a super complex math puzzle first. Only after solving the puzzle, the transaction is approved and added to the blockchain. This process of solving the puzzle is called mining, and the people doing it are called miners. Miners are rewarded with new coins for solving those puzzles. That's how new crypto enters the system. This whole process, verifying transactions by solving puzzles, is called proof of work. Is mining easy? Not really. Mining is super competitive. Miners use powerful machines that cost thousands of dollars and eat up a lot of electricity. That's why you'll hear about Bitcoin mining farms. Giant warehouses full of computers mining nonstop. Some cryptocurrencies like Ethereum now use a different method called proof of stake. But proof of stake is a big topic. If you want a full video about it, let me know in the comments. Now that you understand how crypto works, let's move on to what most people really care about. Can you actually make money with it? Chapter 3. Cryptocurrency as investment. Okay, so is crypto a good investment? Well, it depends. Back in 2016, Bitcoin was trading at around $500 per coin. If you had bought just one Bitcoin and sold it in 2024 When it hit $60,000, you would have made a 13,000% return. But let's look at the other side of that coin. In May 2022, Bitcoin was worth $45,000. By the end of the year, it crashed to $16,000. That's a loss of about 65% in just a few months. That's the reality of investing in cryptocurrency. Crypto prices are very volatile. They can go up or down based on different reasons. Supply and demand, basic economics, hype and fear. A tweet, a rumor, or a headline can cause a boom or crash. Regulations, new laws or government bans can spook investors. Tech updates, changes in the crypto network itself, like forks or upgrades. Market manipulation, whales, big investors, can pump and dump prices. And the biggest reason? Speculation. People buy based on emotion, not logic. So is crypto a good investment? Well, it depends on your goals and risk tolerance. If you're looking for quick profits and can stomach big losses, maybe. If you want something stable and safe, probably not. And if you invest without knowing what you're doing, definitely not. The truth is, crypto is not a guaranteed path to riches. It's more like a casino with some extra code and a lot of charts. That said, some people invest in crypto the smart way. They treat it like a small part of their portfolio, not their whole strategy. That way, if it grows, awesome. If it crashes, they're not ruined. Never invest money you can't afford to lose. Chapter 4, Pros and Cons. Now let's talk about whether crypto is actually good or bad, or both. Pros, the good stuff. No banks or governments controlling it. Crypto is powered by code in the community, not some guy in a suit printing money. Anyone with internet can use it. You could live in a remote village and still send or receive money. Works 24/7. You can send money to someone on the other side of the planet in minutes with much lower fees than a bank. Crypto gives you more privacy than traditional banks. Your name isn't attached to your wallet, but don't get it twisted. Governments can still trace transactions if they really want to. Potential for high returns. Let's be real, one big reason people love crypto is the chance to make massive gains. Some coins have jumped 10 times, 50 times, even 100 times. That kind of upside doesn't exist in most traditional investments. Cons, the risky stuff. Some criminals use crypto for shady stuff because it's harder to trace. Dark web, money laundering, scams. It happens more than you think. Very volatile. Prices go up fast and crash even faster. If stocks are a roller coaster, crypto is a space rocket strapped to a bungee cord. Governments don't fully know how to handle crypto yet. New laws could change the game overnight. In some countries, crypto is legal. In others, it's banned. Lots of scams and fake coins, fake crypto websites, rug pulls, phishing emails. Crypto is full of scammers. No refunds. Once you send crypto, it's gone forever. Lose your wallet? Sent coins to the wrong person? Tough luck. There's no 1-800 number to call. Crypto gives you full control, but also full responsibility. So, should you use cryptocurrency? That's up to you. Just remember, it's powerful but risky. Never invest money you can't afford to lose. Always do your research. Treat crypto like any serious financial tool. Learn how it works. Protect your wallet and private keys. Understand what you're investing in. And most importantly, start small. Thanks for watching, and remember, crypto is powerful, but only if you use it wisely. If you like this simple breakdown, hit like and subscribe for more videos that make finance easy.